We are joined by Lakshman Achuthan, Managing Director at Economic Cycle Research Institute, which is an independent research firm that tracks market trends and provides investment advice for Fortune 500 companies. Also joining us here, Bloomberg economist Richard Yamarone. Gentlemen, thank you. So, Lak, welcome. Let's begin with you. Is this report that we received this morning such a disappointment, such a surprise? Is it now a game changer in how you view the outlook for the economy?
No, because jobs, to be very clear, are a coincident measure of activity. So when we had leading indicators running up in late last year, they're forecasting the recovery that we've seen in GDP and jobs over the last couple of quarters. And certainly, the private payrolls number it's a big disappointment. It's at less than a quarter of what people were expecting in terms of today's reports.
Let me interject here, might disagree with you because the Dow, I'm learning, just dropping below 10,000. We have a massive sell-off today. A lot of concerns stemming from Europe as well. That's probably playing in. But this is a fragile market, and people are very concerned.
No. But the only point I'm saying is that the jobs report doesn't change my outlook for the economy because it's a coincident indicator. We look to leading indicators to tell us where the economy is headed, and they have been telling us since the beginning of the year that the growth in the overall economy would peak out around the middle of 2010. And I think that that is actually the biggest thing weighing on the market, much bigger than things that are going on in the debt markets, even though those are very dramatic.
Rich, let me ask you, because we were speaking earlier, President Obama was trying to put a good face on this, but you and I had discussed the fact that private sector jobs, as our economics editor Michael McKee told us, only about 41,000 private sector jobs. I am reminded during the campaign, the president said something to the effect of, you can put lipstick on a pig, but it's still a pig. What is going on here? Are they trying to put lipstick on a bad situation?
This is one bacon report, if you will. Yes, my good friend here, Lakshman, is extremely correct in that this is a coincident indicator. But things are coincidentally crummy. You don't have, here we are 29, 30 months after the recession, the beginning of the recession, and we can only muster up 41,000 jobs. That's embarrassing. It's not even bad.
What's that tell you?
It tells me that there's very little reason for a business to go and take on the expensive, extremely costly endeavor of hiring workers.
So
but
here's
they
the
have
thing,
been doing it for the last 5 or 6 months. They have been adding private sector jobs for the last 5 or 6 months.
And correct. And one report does not a trend make. You're 100% correct. But the bottom line is, look at some of the detail here, the unsexy stuff that's going on. The 34.4 months and the average duration of unemployment.
No, this is really the rub. This long duration of unemployment, and when you get into the unemployment rate, let's call it around 10% because these numbers are not precise. And what you see is about half of the unemployed are long duration unemployed. They've been unemployed for 6 months or more. The other half, these short duration unemployed, they're getting their jobs back actually quicker than we've seen since the early 80s. So it's a really weird kind of thing that's going on in the jobs market.
So we've heard this term bifurcated economic recovery. Would you guys agree with that description?
Totally. Absolutely.
So let's take the side of jobs recovery. Do we have the potential for organic growth in this country? This is a question we've been putting to many economists lately, right? To get that private sector job growth, some traction, what's it going to take?
The people are getting their jobs back, but they're getting at half the pay that they were. I go around, speak about 30 times a year to these small businesses, organizations, all say, I'm hiring people back at half the wages that I had to. They're taking on temp workers. That's the new change right now.
And temp workers, we typically see temp workers get hired first, or the average work week we saw earlier getting a little longer. Those are short leading indicators of the economy. So it is normal to see that. We just need it stronger.